Welcome to our earnings analysis. Banking results have been the toast of the Q1 results so far. Here's the summary. Very strong beat over expectations. What I can call outperformers are ICICI Bank, Punjab National Bank, Bank of India, IDFC, Karur Vysya, AU Small Finance, and even to some extent IndusInd, compared to expectations, outperformer. Then come the mixed performers, or you can say inline performers. Those came from HDFC Bank, Axis Bank, Kotak Bank. But more important were the misses. The misses came from Bank of Baroda, which had a one-off provisioning, and CSB, where the current and savings account has been falling. Of course, even NPAs rose. But how much is all this in the price? And where are the best bargains in the hierarchy of many good performers? I have with me Nitin Aggarwal, the banking expert from Motilal Oswal. Good morning, Nitin. Thank you very much indeed for joining us. One of the big reasons why I wanted you on the channel is because I think you track the maximum number of banks. Your entire list has about 20 banks, almost maybe 17, 18 banks. And that gives a very good overview of how we should look at the hierarchy. Now, as I pointed out, because of the very steep fall in bad loan slippages and provisioning, many banks have done excellently well in terms of profits. What is your hierarchy? Is it, ICICI, PNB, BOI? What would you say is your best, say, top three bets?
Yeah, good morning, Lata, and thanks for having me. So clearly, our banking sector is kind of making a comeback on the earnings, which were under pressure over the last more than a year. While this quarter, we have seen a decent start, but margins still remain under pressure for some banks, as you indicated. We believe that going forward, things will kind of stabilize, and over the second half, there is a possibility of some expansion in margins at the sector level. And which is where we think the earnings momentum will pick up. And over the year, we therefore are looking at 18 to 20% earning growth for the private banks. And the large banks certainly has been a lot more under pressure, barring ICICI especially. And we expect some performance to show through, therefore, and therefore our top ideas remain ICICI, HDFC, and amongst PSUs we like SBI.
Like SBI. Okay, but I thought your report on PNB was also very strong, and on BOI, Bank of India. I mean, they are almost an all-round beat, both those stocks. Why are you not ranking them as outperformers? You don't see much of a
named
pricing.
3 stocks, as you requested. But yes, certainly PNB numbers also were very good. And in fact, that's a stock that we upgraded last year. And sitting today, I think PNB still has a lot of potential to deliver very steady growth. Bank has a fair amount of liquidity with a controlled CD ratio. Margins, after a series of fall, this quarter they expanded. And bank has indicated for 10 to 20 basis point expansion in margins going further. It has one of the best slippage ratio, which places it well even on the ECL transactioning requirements. So I think PNB overall looks good to deliver comfortably above 1 ROA in the coming years. So, and the valuations overall looks very supportive when you compare it across most of the PSU banks.
Okay, and you wouldn't put BOI in the same basket? Their numbers were also an all-round beat.
BOI, we are not covering actively, so we don't have a formal rating on that.
Fair enough. Oh, yeah, I didn't notice that. Let me come to the big banks again. You know, there's everyone saying that HDFC Bank is also in their top pick. But it's reported the lowest ever margins. I mean, margins obviously are under pressure because they've had to accumulate deposits. Why is everyone persisting? Is it because that every brokerage is saddled with it in in every mutual fund, whether you're selling direct plans or you are selling, specific sector-specific bank nifty plans, this heavyweight is there. So is that why people are not willing to call it neutral? Everyone is calling it a buy despite the persistent problems.
Yes, you are right. There have been a series of problems that we have seen with the bank, which has impacted performance. And the merger-related compulsions that the bank has to deal with in the balance sheet construct, basically, which is limiting the growth, is still there. While they are progressing well on that, and we hope that with FCNR deposits also coming to some reprieve, we will see some decline in CD ratio this year, which will bring it more closer to the steady state numbers. And thereafter, one can look at a 14-odd%, 14, 15, that range kind of credit growth in the coming years for the bank. And besides other problems at this quarter, mainly the margins, I think has continued to dent the investor sentiment, which is why the stock continued to underperform. And all of this, in a way, is making, I will say, mid-sized banks looking like they have been performing better. Therein the earnings are looking to normalize, and many of the winners that we have seen in the banking sector in the last 1 year has therefore come in from the mid-sized space.
Okay. Among the mid-sized banks, which would be your best bets?
So we have been very positive on AU Bank over the years, and that has delivered fairly decent returns. We continue to think that it's a strong franchise which will deliver 20% plus compounding over the coming years. And alongside, we like Federal and RBL within that space.
Okay, but I thought IDFC Bank also did very well. It seemed to be a beat. They've done better even on margins. One of the few banks where margins even increased a bit. You still have only a neutral on it.
Yes, IDFC, we have turned more constructive after this quarter because after facing issues in the last 1 year on the MFI and then respect to the deposit account, I think they have now delivered a strong number in the 1Q. Bank has indicated for a lower credit cost guidance, almost a 20 basis point decline they highlighted. And we have upgraded numbers by 20% for 27 and another 10-12% number upgrade for 28 and raised target on the stock. But we have still not changed our investment rating on the stock. But certainly the view on the stock has turned more positive than what it was before.
Nitin, since you reminded me about upgrading, in which bank or banks were the earnings upgrade the maximum?
I think that IDFC certainly is amongst them, wherein we have seen a decent earning upgrade. And it's not only upgrade. I would say some banks are still seeing earnings decline also because margin is still a variable which is not fully in control. And given how the compulsion or challenges have been there on the deposit sourcing, CASA pressures, you still expect margins to behave in a divergent manner. Like some banks have still lowered the margin guidance still in this quarter also.
No, you're absolutely right. The problem of margins is not going away. It is becoming a structural issue. Deposit cost is simply not falling. I take your point. But all of them have done well because provisions have fallen like off a cliff. If you even look at IDFC and all, it's actually the provision fall which has given the net profit leg up. I take your point on that. But within the large banks itself, do you see any of them being able to really surprise? Other than ICICI, Axis, Kotak and all have been mixed performers. Which one do you think may give you a surprise?
Yeah, I think even ICICI surprised us this quarter at that size. And that's what we wrote in our note, that at that size and scale, the kind of growth and profitability that the bank reports is clearly commendable. And even on a core basis, adjusting for the one-off like IT refunds, the bank delivered a beat to our numbers. And that was a big beat which led to a 4-5% earning upgrade. And in terms of earning growth, we are looking at a stronger growth from names like Axis and Kotak. But that also because, in case of Axis, because of the base effect, wherein things are getting normalized, all the technical slippages and therefore the provision-related challenges, the PSL-related provisioning is now largely done. And you will see, therefore, credit cost turning more benign this year. Okay. Likewise, on Kotak, I will say the credit cost has already come down from the highs of 90 plus basis point. It has halved now, and that will go on to support earnings along with the recovery in the unsecured assets. But on to your question on upgrades, I think we have upgraded numbers a fair bit for Federal and IndusInd also, besides IDFC Bank.
Okay. That's the question I forgot. IndusInd, the CEO was on the channel and he was saying that he sees this as an inflection point. That, this year, or rather in FY26 and the first quarter, they are still only 3% higher in terms of advances quarter on quarter. Year on year, advances actually lower for advances growth. Is lower for IndusInd Bank. But they are promising industry level growth in the current year. That was 18%. You don't think that, do you think they will deliver on that promise, and will that not mean a big jump in price?
I will say that yes, certainly from where they were, like last year was an 8% decline in loan book YOY. This year we have started on a decent note on both advances and deposits. And in our estimates, we are currently factoring around 13 to 14% loan growth. See, 18% growth that we are seeing right now, we expect it to moderate over the second half. So probably for the year, at the system level, we are still looking at growth number to be between 14 and 15. And I think IndusInd will be close by. As of now, we are around 14 for them for the year, but that's still a fairly good pickup versus how things have been in the last 1 year.
Okay. In which stock do you see maximum stock price upside? I mean, see, ICICI is a great performer across all parameters, but it may be in the price. Price-wise, what might surprise you?
I think amongst the mid-sized banks, I will say like we continue to believe that AU is a 20% plus compounder. Our current price target also implies 22-23% upside on AU, and otherwise SBI we are seeing a fairly decent upside. I think the monetization gains and the strength in the core earnings will continue to drive steady returns over the year. Amongst other large names, private banks, ICICI, as you said, there's a name. HDFC Bank, I think it's like there is a value, but of course we need some clarity. And even the management, we are awaiting RBI approval and the board to decide on sending on the name. I think as these clarities come through, FCNR is another monitorable in the near term. The progress on that will kind of be crucial to determine how quickly the re-rating can be for some of the private banks.
Okay, yeah, of course. In terms of the distance from your target price to the current market price, HDFC gap is the highest. But of course, much will depend on how things pan out. Is it fair to say now that until recently, the order used to be first large private banks and then mid-cap private banks and then PSU banks. But the order is now shifted. It is now PSU banks, mid-cap banks and then large banks. Is that a fair statement?
I think, yes, you are right. The valuation band and all the historical, I think, perception and the picture that one has in the mind has changed. And mid-sized banks have made a strong comeback. Large banks, due to one or the other challenges at the bank level, has impacted the overall performance, and which we have seen barring ICICI Bank to some extent with most of the other names.
Okay.
And
go ahead.
Forward, as I think while private banking space as a whole we like more, because that's where earning growth will be like moving towards 18 to 20 run rate. 20 is also because some of the mid-sized names like IDFC, wherein we have upgraded numbers, and the other names which are more prone to unsecured cycle will have a better credit cost that will drive their earnings. Some of them will report a triple-digit earning growth also from the base.
Fair point. Actually, all of us, even in the media, have been stuck to the fact that private sector banks have shown more verve to grow. But in terms of earnings growth, it's the PSUs that have surprised us. And I won't be surprised if they continue to do better, at least for one more year, because they have so much of credit deposit headroom, to escape not having to get high-cost deposits. Anyway, let's wait and see. Thank you very much, Nitin, for taking us with a fine-tooth comb through all the important banks that we need to cover. Thank you for joining us. Wrap up on Bazaar on that note. Chartbusters up next.
For over 25 years, CNBC-TV18 has been the guiding force for investors, steering them through the markets.
Start your trading day with cutting-edge insights and expert analysis.
Seize every opportunity by decoding the forces that drive the market.
Equip yourself with strategies and guidance from India's biggest market mavens.
Invest with confidence as we beam live from the CNBC-TV18 Motilal Oswal studio.